All right, we've had a pretty nice day in the markets. They went green because of some economic data that came in. This is the Stocks with Josh show. Thanks for hitting that like. Just want to say hi, throw a heart in the comment for me. If you're new to this page, I'm giving daily stock and crypto trades, predictions, my charting analysis every single day for free. Hit that subscribe button and that YouTube all notification bell. All right, the news that began to move the markets. First, we saw the Treasury, the 2-year Treasury tumbled more than 16 basis points, but in addition to that, we saw the latest job openings and labor turnover survey showed a decline in open listings in July, which was another sign of a cooling economy. What we've been dealing with for a long time is a red hot economy, and I think the Fed is going to be looking at the labor market. They want to see it begin to loosen up and cool off instead of tighten up and remain hot. And so that gives us the potential that the Fed may take a lax approach and he may stop raising rates. And some people believe that he can even lower rates. Now, personally, I believe that inflation is going to remain a problem because I think we do have a hot economy that's going to even heat up in the third and fourth quarter, which is going to cause more trouble and more hawkishness from the Fed in the coming days. But if the market's up and it's green, I'm not going to fight it. I'm not going to complain. Today, I'm going to be diving into some of my predictions yesterday. We saw some awesome follow through in the charts on what I said might happen with Tesla and NIO. I'm going to briefly touch about it, but I've got two stocks, one that I've talked with you about, one that I have not. Now, these are two beaten down stocks that I see huge potential in, and I'm excited to share with you guys what I see in the charts. If you haven't guessed it, I'm on vacation. I'm down in Disney World. One of those beat down stocks that I'm going to talk to you guys about today is Disney, and I'm sitting in Disney in Animal Kingdom with the giraffes and the zebras out on my balcony. I don't think there are any here at the moment. There's a couple big bison in there in the mud, but out here spending some time with the family. But I had to talk about Disney while at Disney. I'm going to tell you guys what I see in that chart because it got really, really interesting just a couple of days ago when it dropped down to right below $82. And I had to ask myself the question, was that potentially the low? Was that the bottom? I'm going to give you guys my answer on that in just a minute and show you the charts for your own eyes. But let me quickly burn through some popular stocks. We got to start, of course, with Tesla. You're like, Josh, are you going to cover Tesla every day? Man, if I'm making money on Tesla every day, then I'm going to cover Tesla every single day. Tesla up 6% so far when I looked at the charts just a moment ago, up $14, and woohoo, we hit $252.70, blowing right up to that target of $248. Guys, I gave you guys that target the day that we came off of $212. I said, if this thing goes right, and that was the bottom, we're heading up to $248. We hit $252 today. And here's the good news. We actually made that move up to $252 on increasing volume. That gives us confluence between price action and momentum. They're both headed in the right direction, which means that we can hit my ultimate local target of 261. It's absolutely possible. It's absolutely on the table as of today. But let me give you guys support. It's not time to FOMO in. If you're listening to this video and you weren't already in, then the only place that you should consider getting in would be a pullback to 245. So yes, we absolutely are going to not go straight up all the way to our targets. We're going to vacillate. And I think that support has turned to 245. I also want to point out to you guys the last time that NVIDIA and Tesla fired off like this, one, they were the first movers, and so yet again, they could be the first movers. After that, companies like Amazon, Apple, and Google, they followed them. But you also have to remember that being the first movers, the fastest movers, moving up the highest, they were also the first to pull back a little bit. So keep that in mind as well. And then you say, okay, Josh, when it gets to 261, what are we going to do? Are we going to sell it? No, not necessarily. We're going to watch how it interacts with 261. We're going to look at those candles. We're going to look at how the price action was as it moved up. We're going to watch it. We're going to give it 24 hours. We want to let it sit at that 261 level. If we get a monumental red candle, well, we know that that's going to be it for the run. But if we come up to 261 with some smaller price action candles and we begin to consolidate in that area, then we might be moving higher, but we got to take it one day at a time. All right, let's get into NEO. I'm going to keep my review of NEO very, very simple. I told you guys that good news or bad news, it was likely going to have a flash down to 950 and then it quickly would recover and possibly move higher. That's exactly what happened. But I want to take a minute and cover how bad NEO's earnings news was, because it was terrible. The results were, as they said, worse than expected. They were expecting a 33-cent per share loss. They got a 45-cent per share loss. They were expecting 25,000 vehicles. They only delivered 23.5 vehicles. And so it was basically shrinking profits, wider than expected losses, lower deliveries, everything bad that you could expect. But there was a hint that demand in China for electric vehicles was 25% higher year over year. And so that could potentially be why Tesla was doing so well today. NEO's bad news could potentially be signaling more opportunity for Tesla in the Chinese market, and the fact that Tesla's price cutting moves have strategically put pressure on their competition, opening up an opportunity for them there that NEO just can't reach. All right, so let's just review the technicals of what could happen with NEO in the coming days. So we still have a target of 1220 if we can close above 1075. So I think that if we can get a close above 1075, then the 1220 price target is absolutely on the table. But if we begin to drift down, and this is the important message that you guys need to hear, because NEO hasn't really told us exactly what to expect from this stock. So we've got to watch both the upside and the downside risk. We do not want to see this thing close beneath $9.50. If it were to close beneath $9.50, then it would be my clear and straightforward prediction that we're going to make a new local low. And remember, the last time we went down and tested the bottom, it was $7, which means that if NEO closes beneath $9.50, I would short it all the way down to $6. I'm not predicting that. I'm just giving you the line in the sand. The line in the sand to go much lower would be a close beneath 950. The line in the sand to go higher up to 1220 would be a close above $10.75. Okay, I'm going to briefly talk to you guys about Sound. This is just a lightning round. I'm giving you guys everything today. Sound is doing really, really well. Matter of fact, from my view, my rough look at the charts briefly today, I'm just going to tell you guys, it seems relatively assured to me that we're going to pop up to $3.15. But I see some alignment of some resistance lines that, in my opinion, and I've warned you guys before, are going to be strong rejection. Now, don't get upset with me if this thing goes to $3.14 and doesn't hit $3.15. Anything above $3 could potentially be a sell zone, so I want you guys to be aware of that. But this chart is consolidating beautifully, right? It's consolidating in a tight, upward moving price action, which looks to me that it could provide a breakup to our 315 price target. It's going to be another huge payday for those who played it correctly. I hope that helps you guys get yourself prepared for a potential move up on Sound. All right, let me quickly take a station break for the moomoo investment app. moomoo is a zero commission, zero cost to trade platform, and they're offering you guys free stock. So if you want to open up a new account where you can get better trade tools than some of the other retail applications out there, they have cheaper margin, but they're giving away up to 16 free stock for opening and funding an account, as well as a $50 cash bonus. But I use it because I love their tools, I love their news, I love their 8 conditional order types, I love their stock screener, and I love their earnings calendar, which I personally believe is the easiest to use in the marketplace. I'm on moomoo every day, and I host a chat group on that app called Stock Josh Fam. You guys can get your free stock, get your cash, start trading with better trade tools, and then come find the Stock Josh Fam chat group. I will tell you guys that that's filling up. I was told recently that all I can have in that group is 6,000 members, and we might have reached it. So as of the making of this video, but there might be 1 or 2 slots left for those who are interested. So get over there before someone else gets them. All right, I'm going to have a very brief coverage of Amazon. I'm just going to cover Amazon and tell you guys that I told you the other day that when it was at $133 that I see Amazon going back up to $146. No, I don't have a crystal ball, but I like that Amazon chart, and I've been telling you that, and I've been saying it's a buy on this dip. When it was up at $143, I told you that I sold it and that it was going to come back to this level and find support. We did that. Now I'm telling you that I'm buying it and I'm running it up, hopefully back to 146 and higher. And I also gave you guys in a previous video why I'm so bullish on Amazon. It's because in the United States, and I'm not going to get political, in the United States, there is a full-fledged war on brick and mortar. I mentioned that in the entire retail space from coast to coast, $500 billion of goods have gone out the front door. We've got major problems right now in this country, and it doesn't seem like anybody wants to address them. It's what's referred to as a free-for-all. When everybody can pick up their phone and look at smash and grabs and carts running out of Walgreens and Walmart and Target, and nobody seems to be stopping them, when everybody sees that, then you've got millions of employees that think, you know, I'm over here working for my money. I can't afford to buy some of the goods in this store. Then I'll just walk out the front door with them. You know, it's demoralizing. And the bottom line is that brick and mortar stores cannot be profitable. Companies like Target, Walmart, Walgreens, they simply cannot do well. All right, and that's going to be good for Amazon. And that's the bottom line. I think the Amazon stock is going to be the beneficiary of these problems until they get solved. And so it's another reason why I believe that Amazon's going back up above 146. There's conditions here that are absolutely going to affect their bottom line, and I'm going to participate in that run up. All right, this video, I should cut it up into 2 videos, but I'm just going to give it all to you guys. I hope that you guys are enjoying this content. Disney. So I want you guys to look at a couple of charts today. Personally, we know the Disney story that this company has gotten off track. They've gotten away from connecting with their core customers, which is simply family-friendly fun. And they've changed their mission statement, they've gotten political, and they've gotten themselves in huge trouble. They've made a ton of movies that nobody wanted to see. They've lost $1 billion on movies, and the parks began to go empty, principally because the previous CEO kept pushing the prices higher and higher and higher, you know, $100, $200, $300. The average family couldn't afford it. Their Star Wars resort basically was a massive fail. They were trying to rent those rooms out for $3,000 a night. I think they lost all perspective that this whole park, for some believed to be, you know, a vacation that any family in America could aspire to going to. They made it unobtainable, and you know what? The stock has suffered through just plain foolishness. But the fact is that these guys have a very, very long history and legacy of being a well-run company, and they're part of American culture. I don't think it's going to fall into oblivion. I think this is a buying opportunity. I think the management that's going to come in is going to turn around these ideas. This has happened somewhat before in the past when Disney was unable to make anything successful. Then they turned around and got different leaders, and the company turned around and thrived and began to go back into profit. I think the same thing's going to happen. So I'm not trading the moment that we're in. I'm doing just the way Wall Street does. I'm looking further down the road, and I'm beginning to look at trading the company that I want to own 6 months to a year from now. And the price is getting pretty good. Now, it ran up. The last time I talked about this, it was around $84, and I said that it was getting very close to a buy. And a lot of people were started jumping in and buying heavy. But I told you guys it was going lower, and sure enough, we are much lower. It flashed up to 90, but it was a fake out move up, and it's been moving steadily down. And the stock's looking pretty weak, but we're getting very, very close to the buy signal that I gave you guys of $80. But I want you to see those charts again with your own eyes. So let's check it out. So the current situation is that we're making a series of lower highs and lower lows. So locally, if you look at the stock over the last couple months, it's just lower highs and lower lows. But if you take a much broader view and you look out over the stock over the last 20 years, when it's had these massive sell-offs, each of the sell-off has been a little higher than the last. And here's what I want to point out to you guys. So if we look at this broader view of the charts, back in 2014, we see that the stock flashed down to $78.54. And then it ran up for years. And then eventually we got back to the 2020 COVID crisis, and we came all the way down to $79.07. And I want you guys to obviously see that that was just 50 cents above the previous low. But it's super important in the world of charts and technicals that this previous low wasn't broken, and it wasn't. So this is what's called a higher low. We had this massive peak up to $200, but now we've been going back to the dear lows. And just the other day, we got slightly below $82. And we got some buying with heavier volume, which made sense. But I still think that we're going to get this touch of at least $80. But I will tell you guys that this is the buy zone. Now, the only concern that I have from a technical perspective moving forward is if we made a lower low that would open up more room to the downside on Disney that at the moment I'm not seeing. And I'm going to be watching that very carefully, and I'll let you guys know. The lower low that we need to stay above is $79.07. So I don't expect that we will go beneath that at the moment. We need to be watching and making sure that we stay above. But when we came down beneath $82 the other day, and we got around $81 and some change, that was the time to begin to buy, and we're likely going to get one more chance to potentially hit $80 range, and that's going to be a buy opportunity. And I'm not telling anybody what to buy, sell, or hold. I'm simply telling you this is what I'm doing. I bring these trades to you well in advance. Before I even take a position, I tell you the prices I'm going to enter. That's happening again. It's Disney. I'm at Disney. I'm enjoying Disney, having a wonderful time. And I'm going to buy some Disney stock, and who knows, maybe it'll get to my buy target while I'm here. We'll see what happens. That's your prediction on Disney. Now I've got one more important stock that is not one that I have talked with you guys about before, nor provided technicals, and I'm going to pull a Keenan Grace, and I'm going to cut you guys off right there. I will cover that stock in my very next video. If you want to try to do some preemptive homework, I'm going to tell you guys, it's in the solar sector. Solar was up today. And here's the clue I'm going to give you guys about the technicals. Solar took a dive in 2023. So literally it peaked in December of 2022, and it's been pulling back. A lot of great companies in the solar industry have been pulling back for the last 6 months. And I believe that they're now signaling the bottom and a huge potential buy. And I'm going to give you guys the one that I'm interested in, as well as where exactly I think it's going to be going in the very next video. Guys, thanks for hitting that like. Thanks for subscribing to this video. Subscribe to get that upcoming prediction. I hope you guys are making a ton of money and living your best lives. As always, peace and blessings. Take care. See you in the next video.